The Nasdaq had a good day on December 23, 2024, closing up 0.9%. This positive performance was largely driven by strong gains in the technology sector, particularly semiconductor stocks. The S&P 500 also saw gains, rising by 0.4%. However, the Dow Jones Industrial Average remained relatively flat. These mixed results reflect the ongoing uncertainty in the market. Despite the positive close, the markets have been volatile recently. Concerns about inflation and the Federal Reserve's future interest rate decisions have made investors cautious. The markets were down approximately 2% earlier in the week. However, a slight rebound of about 1% on Friday suggests some investors are feeling more optimistic.
Nvidia, a leading manufacturer of graphics processing units, or GPUs, was a major driver of the Nasdaq's gains. The company's shares surged by 3% today, adding over $200 billion to its market value. This surge comes despite recent weekly and monthly declines in Nvidia's stock price. Nvidia's strong performance is being attributed to the increasing demand for its chips. These chips are used in a wide range of applications, including gaming, data centers, and artificial intelligence. CEO Jensen Huang recently highlighted the company's strong position in these growing markets. This has given investors confidence in Nvidia's future prospects.
The Federal Reserve's recent signals about its plans for interest rates have contributed to market volatility. The Fed has hinted that it may slow the pace of its rate cuts in 2025. This has led to uncertainty among investors, who are unsure how the economy will be affected. The CME FedWatch tool, which tracks market expectations for Fed policy, suggests that investors are divided on what the Fed will do next. Some investors expect the Fed to hold rates steady in January and March, while others believe a rate cut is still possible in March. This uncertainty is likely to continue to weigh on the markets in the near term.
Section 4. Consumers are starting to worry. Economic data released today paints a mixed picture of the U.S. economy, leaving many consumers feeling uncertain about the future. The Conference Board Consumer Confidence Index fell to 104.7 in December, its lowest level since November 2020, indicating growing concerns among consumers. This was significantly below the expected reading of 113.2, which has caught many analysts by surprise. The decline in consumer confidence was driven by growing pessimism about future business conditions, income, and employment prospects, which are critical factors for economic stability. Despite these concerns, there are some positive signs for the economy, offering a glimmer of hope amid the uncertainty. The PCE index, a key measure of inflation, showed that price increases are starting to moderate, which could ease some of the financial pressures on consumers. However, there is still some stickiness in inflation, meaning that it is not falling as quickly as some economists had hoped, keeping the pressure on household budgets. This suggests that the Federal Reserve may need to continue raising interest rates to bring inflation under control, a move that could have significant implications for the broader economy.
Section 5 Rumble makes a splash. Beyond the major indices, there were several notable stock movements today, capturing the attention of investors and analysts alike. Shares of Rumble, a video sharing platform, surged by up to 100% following a $775 million investment from Tether, a stablecoin issuer. This significant boost in share price reflects growing confidence in Rumble's potential to disrupt the video sharing market. The investment is a major vote of confidence in Rumble, which has positioned itself as a free speech alternative to YouTube. This move is expected to accelerate Rumble's growth and expand its user base significantly. In other news, Nordstrom, the department store chain, announced that it is going private in a $6.25 billion all-cash deal with the founding family and El Puerto de Liverpool. This strategic move aims to revitalize the brand and streamline operations. The deal comes after years of struggling earnings for Nordstrom, as consumers increasingly shift their spending online. The transition to a private company is seen as a way to adapt to the changing retail landscape and focus on long-term growth. Meanwhile, Bitcoin, the world's largest cryptocurrency, extended its recent losses, falling over 2.5% to around $93,000. This decline continues to raise concerns among investors about the volatility and future stability of digital currencies.
Section 6. What's next for the markets? The stock market is likely to remain volatile in the near term as investors digest the latest economic data and Federal Reserve signals. Recent fluctuations have been driven by concerns over inflation, interest rates, and global economic uncertainties. The upcoming holiday season could also lead to lighter trading volumes, which could exacerbate market swings. Historically, this period has seen reduced activity as traders and investors take time off, potentially leading to more pronounced market movements. However, the long-term outlook for the market remains positive. Analysts believe that despite short-term volatility, the fundamentals of the economy are strong, and growth prospects remain intact. The U.S. economy is still growing, albeit at a slower pace, and corporate earnings remain healthy. Companies continue to show resilience and adaptability in the face of various challenges. Investors should continue to monitor economic data and Federal Reserve statements closely for clues about the future direction of the market. Staying informed can help in making better investment decisions. It is also important to remember that stock market investing involves risk, and past performance is not necessarily indicative of future results. Diversification and a well-thought-out strategy can help mitigate some of these risks. Investors should consult with a financial advisor to determine the best investment strategy for their individual circumstances. Personalized advice can be crucial in navigating the complexities of the market.